When the roses have lost their colors, yeah, I promise I'll stay the same. In a world with billions of people, know that I only see your face. 'Cause a life without you is lethal. So I die just to keep.
Good morning, everyone. Welcome to everyone in the room. If you're here in person, there's donuts and coffee in the back. No, there's not donuts, bagels.
It's a bagel.
Oh,
Bagel day.
bagels in the back. Still missing out. And hello to everyone on Zoom though as well. We have a really great special guest today. So we're going to get through the announcements very quick and then get to the meat of this meeting. So Austin, just let's take a look at the week. We have a good week. So we have a great meeting today. And then on Thursday, we have Rick Gray coming, zooming in or coming in? Coming in, yes, coming in to present to us 2 o'clock, and then it will be a happy hour afterwards. And actually the Southeast Keller Williams office is going to be joining us for this too. So there will be a good happy hour, great presentation. This is the one that we had to reschedule because of the snow. Rick came all the way here and then immediately went all the way back to Boise in the snowstorm. So,
And sat on the freeway for 4 hours.
oh yeah, was stuck on the freeway for 4 hours in doing so. So we are so happy that he's coming back. This should be a really good one, all about habits. Rick is a big believer in Atomic Habits, the book, and mindset. So this should be a great one. Okay. And then Code of Ethics is going to be next Wednesday, 9 a.m. to noon in this room. You do need to register because this is a popular class. And then it makes it easier also for the CE credits to be issued. And here, 9 a.m. and it's taught by our very own Beth Caster on our ALC. So if you need this, which a lot of people probably do,
Yeah, and actually,
tell everyone really quick how to check that.
yeah, so we hunted down the range of time. So if you have not taken the Code of Ethics class between January 1st, 22 and now, January 1st, 2022 and now, you most likely need it. There's a way you can check. We have a link on the Google page, or like this website and the Google Calendar link. You can go and check your status for Code of Ethics, and it will tell you if you've completed it or not. So
Actually, it will tell you if we've uploaded your
uploaded
certificate or not.
Yes,
Yes.
that's true.
Yeah.
So
It doesn't know if you've actually done it.
so if you
But
haven't
you-
uploaded it, you might want to do that. Then you can check. But yeah, we'll have it next week, and then you can complete it because you have to have it by January 31st, 2024, which I know is a long ways away, but might as well get it out of the way. So
Yes,
great.
good stuff.
And Beth's great at teaching it.
Yes. And then started today, Tanya's been hosting a lead gen huddle, right? 9 a.m. Tell everyone about that really quick, or it just is what it is. Come to
It
it,
is what it is.
right? Huddle up
Yeah.
in the like central area of the office, 9 a.m. It's real quick, like 10 or 15 minutes, right? Just to like get fired up about doing your lead gen. Sometimes it's hard to motivate yourself. So when you're surrounded by others, it just adds that little bit of accountability that
I
can
had
help.
4 people today.
Awesome.
They're getting business.
Those 4 people are going to be very successful, right?
Yep.
Okay, next up, Tanya's classes. Oh, wait, no, before we get to that. The Austin is now hosting, because there's been so many new things coming in Command and enhancements. Austin has expanded his walk-in office hours to help with Command. So there's different times in case people, you know, mornings are bad, afternoons are bad. So these are all on our office calendar on the agent website, but these are all hours that Austin's just going to be waiting in his office to help you all with Command. So stop by. and
Bombard
register.
him.
What? Oh yeah, bombard him.
Bombard
Then I'll have to have walk-in 2 hours. It's great.
Yeah.
Perfect. Okay, next one.
Ooh.
Okay, Tanya's teaching 2 classes this week. First
Yeah.
one.
I'll be really, really quick, but I'm excited. I am sneaking this one in on Wednesday during my group coaching time. So social media playbook. You guys are all gonna walk out of here with one of these playbooks. This is to amp up your social media. And the reason why I'm pushing it so quickly is because there was an entire calendar in here for what to post for the entire month of March. And we're already how many days into March? Look at this. and April and May and June. So you guys can amp up all your stuff and be ready to go and be pros
Good
at
stuff.
this.
Good
And
stuff.
then on Thursday, oh, here, show them on there. See,
You get this actual playbook.
on Thursday.
KWRI.
Thursday.
Oh. No, okay.
Okay, on Thursday, how many of you guys want leads? Who wants leads? Who wants more leads? Who wants to own their own leads? I mean, do you want to go pay for them for somebody else to provide for you with everything that you can do? You're gonna do it. Look how big this is. I'm gonna teach you guys how to do it. And the beauty, and I love this, because KW Command has changed a lot. There are, in all of these playbooks that we have, there are multiple ways of how to use Command to do it. I want you guys to bring your laptops to these classes. Going forward, it'll be every Thursday for 2 hours from noon to 2.
Love it. And just
Love it.
show up.
Just show up,
Just show
fill
up.
the room. Give me someone to talk to.
Okay. One last thing coming up next week. Our very own. Dun, 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 dun. Mr. Schwab to my left. Yes, teaching shift principles. There's 12 shift principles to thrive in a shift. And Dwight will be giving them all to you in this class Thursday, March 16th at 9 a.m.
That's right. This is about an hour and a half after class, and next week, is it next week? See, we get the
Yeah.
unemployment report Friday, we get CPI next week. It's highly likely the rates are gonna go up again. That will drive mortgage rates up most likely at some point in the next month or so, if not immediately. And so it's important to know what that means to your business. So come to Shift and we'll talk about, I happen to have been through, I think I ran this off once, but 1980 shift when rates went to 18%. The 87 shift when the stock market crashed 20% in one day. The 91 Persian Gulf War, the 97 recession, the 2001 bombing, plane crash. So I've been through a lot of these cycles where the market changes really quickly. And it's nice to have your weapons ready to be able to adjust to it.
Good stuff. Okay, and just show up there in person only in this room. So now we are going to get to our very special guest live from Utah. We have Kyle Harrison. Austin, will you put him up on the screen so everyone in here can see Kyle? Hi, Kyle.
Hi, everyone. How's everybody doing today?
Good. So wait, Kyle is a KW Maps business coach, and he specializes in finance and bookkeeping for real estate professionals. So he is going to give us some tips for finances for our business. And Kyle, we're so happy you're here.
And we
Take
met
it
Kyle
away.
and
Oh, yeah.
Nelson.
We met
Yeah.
Kyle in Austin. And
Yeah. So
everyone
impressed.
said, Kyle's got to teach a class.
Yep,
for you
that's
guys.
right.
So
We sought him out.
we're excited for you to
Well,
live
truly
up
not.
to all of our high expectations.
Yeah, I don't know about that. We're gonna, the whole thing is to take some nuggets away. There's gonna be some information here. We're gonna just really bring some tips to you guys. Oh, I can see you guys now, so that's good. Awesome. Thank you for having me, Dwight. Good to see you again. Appreciate the opportunity, and again, I'm happy to come into your office sometime in the near future if you guys want to see this live and just really play all out in person. So I'm going to go ahead and share my screen here. I think I have access here, if that's okay. And how much time do I have today?
About 50 minutes.
50? 50? 50?
Yes, 50.
Okay, perfect. Okay, yeah, well, it's going to be about probably a 45-minute to 50-minute range. Can everybody see this okay on your screen?
Mhm.
Yes.
Yep.
Yeah, I'll just go ahead and share this here with you so you guys can see all that. And I've got kind of my screen over here of you. And so I've got the chat box set over here. So if I look away for a reason for that. So anyway, just talking a little bit about top 6 financial tips today. I'm the owner and co-founder of Launch Bookkeeping and your bookkeeping partner, which we're real estate specific for realtors, right? So we take Gary's models, the budget model, And then we actually created our own proprietary chart of accounts to really make it easy for agents to read based off the models that Gary gives us. So today we're going to dive into some top 6 financial tips. We'll do about 45 minutes or so, and then we'll open it up for another 5 to 10 minutes on questions, ahas, and some of those things. So I would like to introduce, before I get started, I asked my business partner to be here. It's actually my sister-in-law, Amy, and she's got 30 years of financial experience with us. And so I asked her to be here, and she might post some things in the chat just on some things that I talk about. So yeah. All right, let's get started. So my name is Kyle Harrison. I am a KW Maps executive coach with just a little over 8,000 business coaching calls. And my niche, like was mentioned, was financials and wealth building. And I also coach leadership and team building. So any rainmakers, people that want to build businesses, build companies, and any agents that want to build ancillary businesses. And the financial piece really starts to come in to really get their business to a point where you could actually have an option to sell at some point. So that's really my niche in coaching, and I love it. I have a full schedule, and I am looking for a couple more clients if they want to take that journey with me. I'm happy to do that as well. This is my why that you can see in front of the screen. My 2 daughters, they're 18 and 16. They're growing up very fast, and they're the love of my life. So I always like to bring the picture of them with me here. So who are we? I'm not going to read everything on here. Our company, I highlighted or I put a line underneath there. We keep to the MREA models and chart of accounts. We're going to dive a little bit deeper into that, why it's important, what some bookkeepers do, what most bookkeepers don't, and why they do them. And so we're going to dive into that a little bit later today. And then creating business reports through the lens of a coach. I don't know about you guys. I've seen a lot of P&Ls. I've seen a lot of financial reports, and they are confusing, and they can be confusing. So we've really created the Gary's chart of accounts, took it to the budget model, and really made it easy for agents to read. Am I on budget? Am I within the model? How am I doing? Based off of what Gary gives us, the 30, 30, and 40. So that's the really important piece, the financials that we provide. And then, of course, we're KW Profit Camp approved. Jeannie Awesomeness, I call her. Her name is Jeannie Awesomeness. She teaches that. I highly recommend if you're wanting to lean into more of your financials, this would be a class to take. I think it's a 3-hour course. It's $75, well worth it. She scuba dives into profit and talks a little bit about the P&L. And so we're actually an approved vendor for that. Okay, so our mission, I always like to share this. We wake up every single day, whether you use our company or use somebody else, we really want to empower clients in achieving financial freedom. And our belief is it's all through their financials, right? Teaching agents and business owners about teaching them about business, how to start to look at their business through the lens of a coach or through the lens of a CEO. And that's what our company wakes up every single day with that mission in mind. So I always like to bring that up. What are we covering today? We're going to cover 6 financial tips. We'll dive a little bit deep in there. Please ask your questions, write them in the chat. Again, we're going to follow up with that. I did bring a bonus tip. So at the end, I'll show you a bonus tip, a little hack that I use when I'm looking at my financials that might be able to help you on that. And then, of course, we're opening that up to Q&A. Being rich is having money. I think, Dwight, you saw that. Maybe, Dwight, you saw this. Being wealthy is having time. Right. And so are we working for money, or is money working for us? Right. And so I think we're all in the business. We make money. We make great money. What are we actually doing with it? Right. 93% of agents out there do not own investment property. There's 1.5 million agents. 93% do not own investment property. They're working for commissions. They're working for money. And I always like to bring this because really what we're talking about today is the foundation that if you want to grow your money, you got to know your money. And as you start to know your money, you can actually start to build wealth. And I like this quote and saying this: are we really focusing on the money? Or are we focusing on what money can do while we're at sleep, or sleep at night? It's a really good quote that I love here. Love to bring this. If you Google today and you say, hey, what's the top 5 common reasons businesses fail? The underlines pretty much attached to your financials. So 80% of realtors fail within the first year. And a lot of that is behind their cash flow management, losing control of finances, and some of their strategies. So what we're talking about today, whether you're comfortable with this or uncomfortable with this, I just encourage you to lean into this and ask questions. Let's all be vulnerable here. Let's learn from each other, and let's pick up some nuggets today that's helping you build your business and build your financial future. Write down this question if you can. What did you come here to learn that you already know and choose not to execute on? That's a fascinating question, isn't it? What did you come here to learn that you already know and choose not to execute on? And I challenge you, and I can't see everybody in the room. I challenge you to really think about that question, not just maybe today or when you go to the family reunions or go to the mega camps. Like what are you already knowing and you're just choosing not to execute on that? If you did execute on, would make that much better in your life or that much difference in your life? It's just a great question to ask yourself. All right, tip number one. I always like to start with mindset. Without the mindset, you really are not going anywhere. So I always like to start with this. And one of the things around mindset is, how often are you viewing your money? What is your relationship with money? And, were you rich growing up? Were you poor growing up? Did you, like Mark King, I was on a call with him the other day, and, he lived in a car. I mean, his relationship with money was terrible. He became a millionaire, lost it all. Now he's come back. And it's really a fascinating story. So what is your relationship with money? And I put 2 books on here that I think are really influential into this journey, learning more about money. Robert Kiyosaki's Rich Dad, Poor Dad. It's just around wealth. I actually had my 16-year-old daughter read this. It's fascinating for her and I to talk about assets and liabilities, and she's starting to understand investing as well, which is pretty cool. And then The Psychology of Money is a really good book just around what your relationship with money is. Really, really good books. I highly recommend them both. And I took this from KW Wealth, from Jason Abrams said this: your biggest expense in your profit and loss is your ego. And I deal with this with a lot of clients. I mean, they're using a system that they're going to use, right? Or they're maybe not executing on something that they should. And I'll give you a prime example of this. There was a client, I'm not going to obviously name any names. However, they used 2 systems that was costing them $1,300 a month. They had held on to them for 9 months because they were going to use them. Cut that out. Now they are $1,300 more wealthier, I guess, back into their profit. And they did a cost segregation. They had investment property. They did cost segregation, and they saved $76,000 in income taxes. And I said, congratulations, you just paid for coaching for 8 years. Kind of a little joke, but that's the point of it, though, right? Where is our ego showing up in the profit and loss of that? And I think it's really a good look at that. How often are you visiting your expenses? I do have a spending freeze exercise. This is a fascinating one. I won't pull it up. We can, or I guess Michael could probably post a view of that in the chat. Michael's my assistant online here. This is a fascinating one. The first step to change is becoming aware. And basically what this exercise is, you go back 90 days of your expenses and you just start to audit your expenses. One client found that they were spending $450 a month at Starbucks. Another client was getting dinged on Amazon for $5, $10, $15. Somebody got in their credit card. That was happening over 9 months. And then another client, somebody had taken their credit card and was buying themselves dinner in their area to about $150 a month. And that was 12 months ago, or for 12 months. This exercise flushed all of that out, right? And I think it's just, again, it goes back to, if you really want to know your money, or if you really want to grow your money, you need to know your money. And just really the first step to change is becoming aware. This is a great spending freeze exercise for you to do it. So I really challenge you to lean into this and do that immediately and just see what is going on, for that. Here's an exercise. You guys okay on the exercises?
Yeah.
Yes. All right. Now, you don't need to yell out your age or anything like that. Just go with me here for a second. If you got a pen and paper, write down your age. Now, they put life expectancy 90. I've heard it's like more closer to 75 or 76. So just for today, let's just use 90 years. So life expectancy is 90 years minus your age equals what? And then take that age, or years, I should say, and multiply it by 365 days. What comes up for you? You don't have to yell out numbers. We don't need to do all the names and stuff, but what's coming to you as you're working through this?
Oh, I read.
Say that again?
19,000.
Yeah. Pretty eye-opening, huh?
Mhm.
Just makes you think, right?
Yeah.
And it just, it puts things in perspective. And the question is what are you waiting for? You know, and you don't really have time to waste. And so as we start to build our companies and start to build our real estate and we're building wealth, and you know, if anybody was at family reunion, Ed Milet said, you know, you are the one, right? And these are the things that just put us in perspective. We have the ability and the difference to make impactful, or to be impactful in our lives. And we just don't have time to wait. I think it's just put things in perspective. And it goes really rolls back into that mindset. I love this one here because it really starts talking about, I don't know about you, a lot of people when they're not busy, they start to get caught up in this order. Oh, I'm gonna get my systems better, but I don't have the sales or the profit. However, man, I'm gonna have a really good listing packet, right? And I think at the end of the day, this is a really good piece here. If you're not on goal and you're not hitting the sales or the profit that you want, this is the space that you've got to live in until that happens. And then you earn the right to move into the order, the efficiency. And I like to bring this up when we're talking about money, because I think sometimes we can get sidestepped about or chase that shiny red object on the wall, where in reality, at the end of the day, it's really about sales and profit. Then you earn the right to the efficiency. All right, fundamentals. Now this is kind of a little joke here. We're going to get into the first fundamental here. Raise our hand. Your name will not mix your personal expenses with your business expenses from this day forward. We all agree and say amen. I mean, it's a little bit of humor here. However, we see this a lot in our world of bookkeeping. We see really that it is a lot of agents are commingling, and it's really, really important from this day forward that you really separate your personal expenses with your business expenses. And so this is the business expenses, personal expenses, checking accounts, designated credit cards, really it doesn't have to be like a business account or anything, as long as it's just dedicated for that. For example, I use I have 3 credit cards. I use one for my coaching and real estate. I use one for the bookkeeping company, and I use one for the personal. And really those 3 all have checking accounts and savings accounts just designated for that. Because you're probably, if you're commingling your business with your personal, you're probably missing out on thousands of dollars in taxable items. And it's really super important. And as bookkeepers and as partners in your business, we've got to be able to pull that out, make sure they're categorized, so then at the end of the year, your accountant is seeing that. And so we actually pull some of your office bills, your office supplies, meals, just really making sure that that things are categorized properly. Number 2 here. Just say yes, maybe, no. There's no right or wrong answer. Does anyone know in this room know what the difference between a business profit and loss and an accounting profit and loss? Just out of curiosity, I think you guys are. So I see maybe a hand or 2 up there. Well, let me just explain it to you really quickly here. Most agents that I see, profit and loss, right or wrong, at least they're doing it. That's amazing. They come to me and say, hey Kyle, I've got a profit and loss. I got a business profit and loss, and I'm making good business decisions. And as we start to look into this, accounting profit and loss basically is what the accountant wants to see at the end of the year. It's your gross profit, it's your expenses, boom, they file your taxes, away they go, right? And so why it's easier on bookkeepers, because everything is plugged in from your QuickBooks into every account and just comes in, and then you can categorize it and off you go and hand it to your accountant. The business side of things, and we're gonna share that here in just a second, is we're taking every single DA that you guys get, and DA's disbursement authorization, and we're pulling apart your gross commission income, any agents that are paid out, your KW cap, your KW royalty, if you got teams, you're paying out your agents. That is super important because the cost of sale is such a major part of your P&L. And so it takes time to be able to take that DA from you on every commission check that you get, and then be able to make sure that we're categorizing properly. Every single model, every single financial book that you read, they're going to show gross revenue minus cost of sale equals gross profit. If they're only seeing you as business owners, you as CEO of your companies are only seeing gross profit, you're driving down the road with one hand over your eye because you're really not seeing the full picture of it. And I think that's the biggest piece. That's the Gary's models that he gives us, the chart of accounts, how he works all that, all the percentages that he gives us on that. It's all off of GCI. And I'm seeing about 95% of agents are not tracking their GCI nor their cost of sale. So that's really the difference between the two. And I can go a little bit deeper in if you have a little bit more questions on that. However, it's super, super important. If you want to run a business through the lens of your financials, you're going to have to get to that business profit and loss. That's just how things are, how decisions are being made from that. 30, 30, and 40 model. If you haven't heard that, get to know it. This is just a model that we measured against. And quite frankly, we're only as good as the information you provide us. And so I think the financial fundamentals is an important piece of that. All right. Who is paying the bill for your lack of discipline around money? What's your thoughts on that question? Kind of hits home, right? Potentially hits between the eyes. So by us not leaning into our own money, by us not having maybe a personal budget or not looking at our personal our money at home, who's really paying the bill? And a lot of times it's either friends, family, et cetera, people that love us the most, that really are behind us, are in our corner, they're paying the bill. So I just challenge you to continue to lean into this. All right. Tip number 3 is really understanding the disbursement authorization, which is the DAs. And it goes back to that cost of sale, kind of the business and through the accounting, is every single check that you receive, really pay attention to it because it shows your cap, your royalty, and et cetera. However, it's such a vital part of your business, and most agents are not paying attention to that. Now, of the DA, and your MCA can get with you on that. Sometimes it's put into command. Sometimes it comes with a check. It just depends on what your market centers are doing. I just challenge you on every commission check that you receive, just pay attention to it. Don't look at the summary, look at the detail, whether it's KW Cares or whatever that looks like. This is an important piece of your business that a lot of agents are overseeing. Tip number 3. Tip number 4. I could probably spend the next hour just on this tip. This is probably, I shouldn't say probably, is the most important piece of your P&L and your financials, where most agents and most business owners are not paying attention to. 90% of your money is lost in the cost of sales. So you teams out there that have buyer's agents, or maybe it's a big referral-based business or whatever that looks like, what typically happens when agents are not tracking cost of sale, they're not making the profit that they want to make. And what do they end up doing? They end up going to cut some of their staff, or they cut lead gen. So by not tracking cost of sale, they're literally choking their business because they're not reinvesting in that back into leverage, back into lead gen. This is an important piece of your financials. And there's 4 main categories of this. There's a couple little anomalies like ISAs or like E&O insurance, some other things that I've seen throughout the years. However, it's basically 4 things: your cap, your royalty, agent splits if you have a team, and any outside referrals paid out. Talks about disbursement authorization. Tracking the cost of sale, listing, and buyers. And I'll give you a prime example of this. We look at P&Ls all the time, and by not being able to do that, it's hard to see if you have a balanced business, right? Gary says, hey, you should have a 60% listing business, a 40% buyer business, at the very minimum 50-50. Well, if you're not pulling your DAs and not seeing where your business is coming from, it could be really lopsided. And we've seen this before, where 80% of the agent's business was buyers. Well, they're gonna hurt because what happened back in September, right? Dwight, you just mentioned the interest rates have gone up a little bit. And so you've got to really be able to track that. If your P&L shows that you're lopsided a little bit, you know where your gap is to really focus on what kind of business you need to bring to the table. And that's a really important piece of the cost of sale. Review agent splits. I give this example. This is a true story. I had an agent that was making over $800,000 in GCI, and they had to go get a second job to pay their mortgage. True story. Maybe you're thinking, wow, how could that possibly be? Well, the biggest one is that they weren't tracking their cost of sale, and their agent splits were just way out of whack, and they just were not investing in their business. And so got the cost of sale back up and everything was good. That's the importance of cost of sale. And I bring that to you. Gary says, whoever controls the leads controls the business. That's an important piece of that. And agent caps and royalties, who pays them? So are you really interrogating, like, Is my agents paying them? Am I as a rainmaker paying them? How much is my business referrals? So again, this is really an important piece of your financials. And what
Kyle,
percent?
can you elaborate on
Sure.
why our agents would want to track the cost of sales separately than their expenses?
Why?
Just
Well,
for those who might not be as familiar with the MREA.
Yeah, sure. So cost of sale, if whether you're selling widgets or you're selling clothing, it's basically what's potentially the business costing you, like money's coming in and money's going out. It's really lines up with the MREA model for that. The cost of sale is just an important piece, and accountants will argue this. I've argued this with accountants. They said, we only want to see gross profit and expenses, and that's it. However, the biggest thing that we see as a coach in businesses, that the split structure with our teams and how things are set up within maybe the market center, it can just be off. And if it's off, and let's say an agent is, and I'm just using this as an example here. Let's say an agent's getting paid 90% to the agent, 10% to the rainmaker. Well, you're actually losing money at that point, because you're paying for all the staffing, you're paying for the flyers, you're paying for all the stuff that goes in the expenses. So your gross profit really comes down. If you're not tracking that or paying attention to your outgoing commissions or your outgoing referrals, it leaves you very, very vulnerable. And so if you're not tracking it and you're seeing your gross profit not the way you want it, you start to really cut into the what I call the bone of the business, which is your compensation and your lead gen. That's really why you track it. And that all comes from your DAs. Does that answer your question? It's kind of a roundabout. It's just an important piece of.
Yeah, because I feel like sometimes agents will ask like, well, my accountant only doesn't care if I break out cost of sales. So that's why I just kind of brought that up.
Yeah. Ask that same accountant if they had a widget company, would they say the same thing?
Hey Kyle, can I give you another example
Sure.
that the agents might relate to? Each year I keep track of what I call, my category in my chart of accounts is called closing concessions. So in the last, month of a transaction or week of a transaction, if I reduce my commission, or if I pay for an expense, like a repair or like any of those things, then I count that in my chart of accounts as a closing concession. And I was doing my taxes, 2018, I think, and it was like $13,000. And I thought, holy cow, this really got out of control during the year. I have to do this differently. And as I reviewed, I realized I wasn't collecting money from some of the owners on some of the things we were doing to get the homes ready, some of the repairs that we were doing for the home inspections. And I was just paying them to get them done quickly so we didn't have a delayed closing. And then we were forgetting to collect from the owners. And at the end of the year, when I reconciled the whole year, I thought, holy cow, it's like $13,000. I got to change that.
Right.
And so that's like an easy way for us to relate to keeping track of your cost of sales.
100%. Yeah, that's exactly right. Yeah, thanks for that. Yeah, you're spot on with that. It's a piece that's overlooked a lot, and it can just it can really save you, like you just said, Dwight. That it really can save you when you're paying attention to it, and then you're just able to make business decisions from it. And you're right. Accountants will say, "I only want to see gross profit." Yeah, because their life is easier when it happens that way. Especially if your accountant's doing the bookkeeping, they don't want to be able to look at your GCI. They don't want to look at your cost of sale. Every model that Gary gives us is around those two. So you're really not seeing the percentages. Am I 30, 30, and 40? Well, if you're not tracking the GCI and the cost of sale, you don't really know. And 30, 30, and 40 is 30% expenses, 30% cost of sale, and 40% profit. Well, if you take one of those 30 out, you're looking at 70%, right? So it's such an important piece on this. And seriously, I can literally spend an hour here, and I can take a P&L, we can just chunk it down and where are the holes, where's the vulnerabilities, base it off of these cost of sales, and it just says a lot. It speaks volumes on that. All right. Tip number 5, lead gen. Repeat after me, everyone. There are not many things 20 real estate conversations a day can't solve. You want more money? Go have 20 real estate conversations a day. I coached in a world of simplicity. Keep it simple, right? I don't have the money or I don't have the business. Okay, let's look at your schedule to see if it really is in alignment with your actions. Oh, it's not happening. Oh, okay. Go have 20 real estate conversations a day that you can't solve. So I bring that up in humor a little bit. However, agents and business owners, you want to go crush this market. This is the first place you start is 20 real estate conversations a day. And I loved what Jay Papasan said on, I think I'm pretty sure it was Jay on stage. He said, in this market, you're going to gain market share that you will never lose. And some agents will actually lose market share that they will never gain back. So the choice is yours. Are you going to get into the 20 real estate conversations a day, take all the noise and all the things off the shiny red off the wall and go right down, did I have 20 conversations a day or did I set one appointment? Keep it that simple. Your business will look different in 90 to 120 days. It just will. Are you tracking your leads? Are you qualifying your pipeline? Right now, every single client that I'm coaching, we are drilling down their pipeline. When does the buyers actually need to close? What's their drop dead date? Do they have a plan B? Because if they have a plan B, they don't have a plan A of buying. Like we're really just drilling down what the pipeline is. I challenge you to really interrogate that as well. Lead gen is to find business. Lead follow-up is to build a business. So people say, I got all these people to follow up. Well, if you're not filling that hopper with lead gen, at some point that hopper is going to dry up with the lead follow-up. So you always got to have both in that. And I give a conversion rate example on the lead follow-up. I've got a client right now that we talked about conversion rate, and we're looked at just increasing their conversion rate by 20%, or excuse me, 25%. And they have the leads, they have the listings, we're just not getting the conversion. So we're honing in the conversion. By just increasing that 25%, they're able to put an extra $250,000 back into their pocket. I think that's a pretty big gap that we're working on. And lead gen is such a big piece on the financial side. Are you interrogating that, looking at the conversion? Gary even says it's either leads or lead conversion. It's really that simple, right? And are you interrogating that? 82% of all businesses come from 4 lead sources. I'm a huge component when people say I need more. Usually the word is less, right? The opposite of more is less. I challenge you, the opposite of more is better. Where do you need to get better leads? Where does your sources need to bring you better referrals, right? Where's your scripts need to get better? Who do you need to talk to better, right? Everything better. And so when we look at this, 82% of all businesses come from 4 lead sources. Take all the lead sources that you have, hone them down into 4, and where do you just need to go own those spaces? And I bring that up because it's such a big piece of this, and it's lead gens on your P&L. And if you're not able to really make business decisions from where your leads are coming in and what your ROI is like this, then it's hard to make business decisions. So do you really understand if you're paying or investing in online lead generation, are you getting a 4-to-1? And what that means is for every dollar that I invest, I get $4 back, right? That's a very minimum. What we're seeing databases investing is 8-to-1. This is just a nice little ad there. 120 million leads sold last year, 6 million transactions. Do the math, right? So your database is where it's all at. Some clients are getting a 50-to-1 because they're very in tune with client events and they're investing money. They're pulling in partners. And they're just doing a lot of things on that. Go love on your people. This is the time to do it. Categorizing properly. I brought this into this because it's part of lead gen. Last year, if you were having a meal with a client or meal with family and you're talking real estate or meals with whoever, and you were talking specifically real estate and you put that under your personal, you just missed 100% write-off of that meal. So meals are now that in 2023, it's 50% back to 50%. So if you need to go back to 2022 and you haven't filed things and you know for a fact that you spent things on meals, I encourage you to do that because that's part of your write-off. And then entertainment, we get a lot of meals and entertainment. If it's categorized under entertainment, you get 0 write-off, period, non-negotiable. It's just the way the tax. I'm no accountant. That's just the way it is. Maybe convert that to advertising and promotion where you can actually get a write-off on it. So that is a really big tip to pay attention to. So when you're investing in your people or you're going to invest in the golf hole or sponsor the golf hole or maybe something at a school or something, make sure it's categorized under the promotion. And I would say another layer, make sure it's categorized under sponsorships. So then you can get that write-off. Charge a transaction fee, another part of adding more money to your bottom line. I've got a client that just started doing that, adding that $300. They'll do 100 transactions, do the math, right? And so half of them are about sellers. So 50% of that times 300, they just added more profit into their money by just adding this into their agreements. Vendor partnerships, this is a good way to work to try to zero out lead gen. Are you leaning into your partners? Any client that comes to the community, they're probably going to call a realtor. We're supposed to be the hub of everything. Are you asking your vendors to sponsor things with you? And the whole question I always ask is, how can we actually zero out your lead gen? And I think it's a question that we always need to bring to each other is, where do we need to leverage this and bring some of our vendors in? They get the opportunity. We get to meet their people as well. It's just a way of growing our business and really interrogating our lead gen. All right. Tip number 6, I probably should put this on here that I'm not a tax advisor. I'm not a CPA. I sometimes play one on TV. Little joke. Just again, I know a little bit. I've got my stepdad. He's a tax expert. So we talk taxes. However, these are just some tips that I'd like for you to pay attention to. On the next slide is actually an invite to our Financial Friday, which is this Friday. It's all around taxes. So there's 2 games that are played. And you just need to think of it this way. Every day you wake up and you say, hey, I need to go sell something. That's the game of making money. There's a second game. As you start to make money, what's the game of keeping your money? And that becomes really the question. And when you want to build wealth, people are really good at keeping their money and not just making it, keeping it. Tax Strategies to Lower Your Income Exposure is a great book. It's Tax-Free Wealth. If you want to maybe fall asleep at night, maybe read that if you're not big into taxes. This page number 261 is probably, in my opinion, the most important page in this book. It's 10 questions to ask a tax advisor and 10 questions that tax advisor should be asking you. And a lot of times we have CPAs that just take your stuff, they rubber stamp it, and boom, they file your taxes. As the more money you're making, you're going to want to start leaning into this game of keeping your money, and you want to hire a tax advisor. Such a big piece of that. Earlier I said meals, 20% right, or excuse me, 100% write-off, 50% write-off now. Bonus depreciation, this is one, if you're an investor, cost segregation and bonus depreciation are 2 terminologies for investing. It's to push your income, your taxable income down through investing. That's changing up in 2023. It used to be 100%. Now it's going down to 80%. If you have questions, just Google it, kind of start to ask it, maybe ask some of your people in your office that understand investing. Hey, what's cost segregation and what is bonus depreciation? They should be able to explain that to you. Inflation Reduction Act, all of 2007, 2022 was $500 total credit for that time slot. And now the government is doing $1,200 a year for the next 10 years. So every single year. So there's some new things coming down the pipe. There's some really cool EV credits, electrical cars. And then here's the argument that I get a lot. Well, I shouldn't do a tax S Corp, or I shouldn't. Talk to your tax advisor. Here's what I do know. It saves you about $5,000 to $6,000 a year in Social Security tax savings. So again, these are just things for you to really raise the awareness that you can take and ask your accountant on. Important. Mileage is 0.655 a mile. Be sure that as you're showing houses and you're looking at things, make sure you're really tracking those miles, because you get a tax write-off as well. And then, of course, I mentioned sponsorships earlier. I think we've got a few more minutes and we'll open up to questions. And then I guess the last thing is keep great books. Separate your personal and business expenses. If you are commingling, you're probably leaving a lot of money on the table for that. And this is the invite to Friday. This Friday, it was supposed to be last Friday. There were some storms. I don't know if you guys got hit with some storms. There were some storms coming through the Midwest. This is actually my stepdad. He's a professional expert on taxes. He speaks on it, speaks all over the country. He's been nice enough to spend 2 hours with us. And he's just specifically for real estate professionals. So he's going to go through a lot of the new tax laws, like what's 2022, how do you start to prepare for 2023? And then, of course, you've got that, and maybe Amy, you can post that into the chat if you've got a registry there where people can take that and maybe register. If you can't come, I encourage you to register, so then at least we can send out the recording and maybe give it to your accountant, or just maybe get some ideas to be able to ask your accountant moving forward. All right, here's a bonus tip. I love this. Every time I look at my money, I'm always thinking about this. And the acronym is CRONC. KRONC. The K is keep. What is vital to your business and that makes you money, right? So am I looking at my P&L? Okay, what is actually making me money? What do I need to keep to make sure that the business survives, and not only survives, it thrives? So that's the K. The R is the replace. What are you using with a less expensive option? Cell phone service is a big one. Cable, like where could you look to say, hey, I'm using this and I could save X by just switching over to this, and it still provides Y in my business. So it's something to really take a look at and examine. Offset, get vendors to offset your marketing investments. If you're doing mailers, get them to put their logo on the mailer. You're offsetting some of those investments. Again, this is all about tips of ways of driving profit into the bottom line. So offset is the O. And then renegotiate contracts. If you're in expensive phone systems, CRMs, maybe you're in a contract that's a couple of years long or whatever that looks like, renegotiate them. This is the best time. I cut my teeth in real estate in 06. And I got to live through, and it was an honor to live through 08, 09, 2010, right? Because we had renegotiated a lot of things during that time, and learn how to do short sales and foreclosures. And so this is a really good time. When the market shifts, this is the time to really drill into your expenses and see what you could actually cut or maybe offset and renegotiate. And then of course, cutting is on here. Be sure to cut the fat and not the muscle or the bone. I've seen agents cutting muscle and the bone that's really vital to their business. It's just pay attention to that as you're going through that. It's just super important. So CRONC is a great acronym. If you're looking through your personal or you're looking through your business, really keep to that. Keep, replace, offset, negotiate, cut, and then kind of see where things line up. So what did we cover today? Covered mindset, covered financials, covered DAs, and 2 profit and loss hacks. I do have 4 more other hacks that I drilled down on the profit and loss when it's more profit and loss specific. And we're really getting into the meat and potatoes of the profit and loss. And of course, we covered some of our tax tips and our bonus tips. Now, I know I threw a lot of information at you. I know you're probably just drinking through a fire hose. I get that. However, if you really just pulled some things away that you can implement today, I think it's really important for that. And so thank you very much. I would like to open it up to some questions, and then we can talk about that, and then maybe walk away with a few ahas from today, and yeah, how we're getting better. So let's just open up to the floor. I'll open up the chat. So whoever they're putting questions in the chat. Okay, I don't see any questions in the chat.
Do we have any in the room? And thank you so much, Kyle. And Austin's posting the links, right? You'll post the link somewhere. Okay.
I have a question, Kyle.
Yeah.
So right now you're super busy pulling together all the accounting data for returns for your clients. What are you seeing? Are there a couple of things that you're seeing that are pretty consistent with last year in with realtors that you can either warn us about or give us a clue to maybe look at?
Yeah. Good question. I mean, we've got a lot of clients on that. It really kind of boils down to what we're seeing. And Amy, you may want to chime in on this of what you're potentially seeing as well. It really boils down to just really paying attention to the cost of sale and the lead gen. And if they're tracking the cost of sale at a high level, that can really make an impact. Meals is starting to come online. People are, oh, that was a personal meal, which in turn it was a business. So there's definitely some write-offs, stuff that we covered today. That's why I took these tips and just really drilled down on them because these are some of the awarenesses that we are seeing, Dwight, for that.
When you say meals, if I go out and buy myself lunch versus I take like a client or working associate or something out to lunch, how do you differentiate between what's deductible?
I don't. If you're in between appointments and you're in real estate and you need to eat in between that listing appointment, you're heading to the next listing appointment, then that would be a meal. Now talk to your accountant on that. However, you're in real estate, you're doing business that now if you're taking your family out and you for dinner and you just say, hey, I'm buying an investment property and like we're right off, that might be a little gray. However, if you're in the business, working in the business, and then of course, if it's clients, then that's obviously right on your credit card as well. And I think that's why a lot of agents are missing that because they're not separating like their credit card for business, personal, etc. Yeah, so
Thank you.
my pleasure. Any other questions?
I was saying, are there any other common things that you see that people miss? That our agents should keep better track of?
A couple good questions. You're a coach. You get us thinking. A couple of things that I see that people really miss and potentially don't get right is that they're paying themselves a salary. 1099s, like if they're paying a vendor over $600, well, really by tax law, you need to issue a 1099 to that. And so I think agents miss some of that, or they're maybe not. They think they're paying themselves a salary. In reality, they're paying themselves a shareholder distribution. They're just pulling that out of the company. Well, that shareholder distribution actually shows up on your balance sheet. It doesn't show up on your P&L as a salary. And so there's been some confusion with agents like, oh, I'm paying myself a salary. No, you're really not. You're actually just taking shareholder distributions, for that. So those are some things that we see a lot. And then I see a lot of like signs, photography, and like key boxes. People want to add that into their cost of sale. And those are all lead gen things. So just making sure things are categorized. And probably the biggest thing that we see is Amazon. They buy it on their business account, and it's got paper, it's got shoes, and it's got like, we got to really pull that out, right? I mean, the shoes don't go underneath your business P&L. However, the paper can as supplies. So it's just becoming aware of that. And I don't know about you guys, who's ever doing it. When I go to buy something, I'm like, okay, like, what am I really buying? And in Amazon, if it's personal and business, I'd make 2 transactions. One that's business, and so it hits my business credit card, and one that's personal, that hits my personal. So I really keep track of that. And the other thing that I see a lot too is moving money around and not tracking it. So for example, the business needs $5,000. Well, I'm going to write a personal check to the business to $5,000. Well, that could potentially come in as income because it's showing as a deposit, right? So we really want to make sure that's a loan to the company, or we categorize that properly so it really doesn't show up as an income. We'll probably catch it because we reconcile things based off your GCI, and it's like, okay, what's this $5,000? What is that? Oh, that was an investment back into the company. Well, that goes to your balance sheet. That doesn't come on your P&L. So just really be mindful if you're moving money around, like how does that trail? The trail almost has to be caught as if you were not speaking to your bookkeeper. And what I mean by that is kind of like the deposit. And if you're moving money around, you really want to make sure it trails. So let's say, let me give you another example. Your business needs to buy something and you don't have money into the business. I see a lot of people just say, I'm just going to buy it personal and buy whatever it is. To really track that personal money needs to be a loan into the business, and the business needs to write a check to buy it. Does that make sense?
Yeah.
So we see a lot of stuff where it's commingled, and it's just not, the channels are not, and it's hard for us as your financial partner to pick that up and to really categorize appropriately. It's important. I just threw a lot of stuff at you. Great question, by the way. Yeah.
Okay, wait, I have one more good one and then I'll stop talking. So we talk about
I'll talk. I have a question.
we're a mess. 30, 30, 40. So from the MREA, and then I've seen some stuff that there's a little bit of like revisions and changes if you're just a solo agent with those percentages. Can you speak to that at all?
Yeah, if you're sole agent, the cost of sale, you're still going to want to track your cap, your royalty, and any referrals paid out, right? Any referrals that come in. If you don't have a team yet, that it's probably not going to be, you're going to be more profitable because you are the business at that point. It really starts to weigh if you're starting to build it. I always use the terminology of I do it, we do it, they do it. So if you're in the I do it as a single agent, you're the business, right? And then as you start to move to we do it, that's going to be a staff member or maybe another agent. So that's where that cost of sale, where that 30, 30, and 40 really starts to become important. And then at some point, if you want to get out of the business as a 7th level agent, then you really need to pay attention to the cost of sale, compensation, et cetera. So as single agents, just start to become aware with your money. Just start to pay attention to expenses and I would even say the biggest thing I see a lot of single agents, do they really understand their personal money? Because if your door to your front door to your house is wide open and you're making money and the back door is wide open too, and it's going right out the back door, I challenge newer agents to shut the back door of their personal expenses, really understand their the Life by Design shows like, what's my break even point? Like, what is your home budget to keep the lights on? What's the budget for the business to keep the lights on? How many closings do I need to have to be able to break even, right? To keep everything on. And then what kind of profit do I want? So that Life by Design forms are a really good one, especially for newer agents to be able to pay attention to.
I have a question. You said that the mileage deduction is 65.5 cents per mile now. That's
Yeah.
for 22, right?
Yeah.
Or is that 23? Okay, so
No, I stand correct. That's 2023. That's going to be the new one. That's what my stepdad told me.
the way I've done it for most of my life is what I think is the other way. Hopefully it's still allowed because my accountant has never said anything to the contrary. Is I add up everything I spend on my car and I take 85% for business. So I'll add up my repairs, my tires, my oil changes, my gas, my, whatever, and then take 85%. And then we were trained that within the year for at least 90 days, you have to track the mileage so you can prove it if you got audited that in fact you did hit the 85% business. Does that still hold?
Yeah, does the business own the car?
No, no.
Okay, that's usually the biggest question. If the business owns the car, usually you can get the write-off for the tires, the oils. Now, I'm no accountant. This would be like whatever keeps you out of an orange jumpsuit at the end of the year, you want to follow that. However, that's what I've always been told. When the business owns the car, then you can write off all the other stuff. If you're not wanting to track, my guess, Dwight, you probably track it pretty well. If you're not wanting to do that, just pay attention to your mileage. That would definitely.
I've never declared whether the business owns the car, and I don't depreciate the car. I didn't write off the car except for the annual expenses, and seems to pass my CPA every year. You never.
Yeah, if he's good with it, then then you're definitely fine.
Mhm. Before we wrap up, are there any questions in the room for Kyle? Lots of good info. And if you were confused by any of the Millionaire Real Estate Agent references, you should read it again.
Read
Come
it.
by my office and get a copy. Because it is such a good reminder of the foundational models that go into everything. Mark, our finance ALC chair.
If you would like a copy of Quicken or QuickBooks versions of the chart of accounts, reach out because it's a lot easier to start tracking it now rather than do it retroactively when it comes time for taxes. So we have that, we've created it, it's available for you.
Yeah, take them up on it because it can really save you thousands of dollars in taxable income if you're tracking it properly and just a
And then
spreadsheet chart of accounts. So that's great.
When we met, Kyle, you gave me the commercial agent chart of accounts, right? So I have that, but what we're trying to push here is for our agents to start thinking of their business, your brand, right? To start thinking of what you do as a business, which means you should implement a chart of accounts right away so you can force yourself to start tracking where you're spending your money. And if you don't do that, what's that saying? If you don't know where you're going, any road what is it? Yeah, if you don't know where you're going, any road will get you there.
Mhm.
Yeah.
So if you don't keep track of your expenses, you're floating through the year, and then at the end of the year, you have what you have, right? So anyway, that's what we're pushing here.
We keep things simple, and business is it's really about two things: increase revenue or increase margin. Is there anything else between that? Either have more sales so you can make more money, or just increase margin of your profitability, right? And I think it's just with that, and it just starts on the line of this. It's follow your money. So
That's good.
Perfect.
That's good to end with. Kyle, thank you so much for being
my
here.
pleasure.
We
Yeah,
really
if you need
appreciate
anything-
it. So many good
Thank
tidbits.
you.
Have a great afternoon.
Thanks, guys. Appreciate you. Take care. All right. Bye-bye.